Namaste and welcome back to Smart Credit with Sangeeta. Are you ready to decode the world of MSME loans? So, whether you are a business owner looking for funding, a finance professional eager to understand loan structures, or a banker guiding clients, this video will break down all the major types of MSME loans in India. We will clarify how each option works, who it suits best, and what both borrowers and lenders should consider. Let's get started. Choosing the right loan saves your time, reduces paperwork, and increases your chances of approval. Banks have different products for different business needs, so knowing what suits you best is the first smart step. Let's go. Why loan types even matter? Why? Everyone has this question for both banker and the borrower. So every business has different needs. Some need funds for machine purchase of factory line and building, or some needs it to manage their daily cash flows. Some want to expand their business. Choosing the right type of loan means faster approvals, better interest rates, and fewer rejections. If you know what type of loan you want, you can clearly tell your lender what is your requirement. It will minimize your time and paperwork. And same is the case of lender. If they understand what type of loan do you want, they will tell you exact what paper is needed, and it will be processed in very much lesser time. Types of MSME loan. Let's break down the most common MSME loan types one by one. First comes in the category is term loan, the basic loan. Definition of term loan is lump sum loans for a defined tenure, ideal for capex like buying machinery, factory shops, land and buildings, or vehicles. This is best for business with expansion or upgradation plans. The banker's note can be on this: fixed repayment schedule, make risk assessment straightforward, review cash flows projections carefully. This loan is basically completely on your projections. You need to give the invoices of the purchases you make. Categories working capital loans. These are short-term funds that are required to cover daily business costs such as stock, supplier, and wages. They are ideal for managing day-to-day operation. They are linked to your current account, and interest is only on the utilized amount. They are useful for seasonal businesses. The one pro tip will be from my side: loan eligibility often hinges on historical turnover, good for analyzing balance sheets. They are basically on your past records. In some cases only we deal for the future projections that are exceptionals. Okay, now next comes in this category is overdraft facility and line of credit. The difference between overdraft and line of credit is very minimum. Overdraft is allows you to withdraw more than your account balance up to an agreed limit. Interest is charged only on the amount used. This is basically in the private sector bank. Based on your current account turnover, they give you a limit, and it changes month to month based on your turnover transaction. It can also increase or it can decrease, and the interest is usually charged on only the utilized portion. Now, line of credit is pre-approved revolving credit. You can use repeatedly, perfect for seasonal or fluctuating cash needs. That is clear by its definition, right? Now let's move to invoice financing and bill discounting. Very few people in the industry know this. They are just suppose you got an order, you have invoice. You can get instant fund by selling your invoices to your lender, and the lender will collect directly payment after your completion of order through your invoices. They are best for businesses that are waiting their clients to pay up. Now next come is this is a non-fund based facility, basically a bank guarantee. What it is: a commitment by the bank to pay to the third party if the MSME fails to meet contractual obligations. This is used mainly in tender bids, project contracts, or leasing agreements. Now for bank it's important to assess the risk, as the bank's payment liability kicks only if the borrower defaults. Before default, no no requirement for fund arises. Once it is default, this non-fund based is converted into fund based, and bank is obligatory to pay its the third party on behalf of the borrower. So next comes is letter of credit. This is also a non-fund based facility. A bank assurance to seller that payment will be made once a specified document and conditions are fulfilled. These are ideal for businesses involved in import, export, or large purchase requiring trust between trading partners. This is very simple, right? Next is packing credit. This is a short-term pre-shipment finance facility. This is extended to exporters to fund the purchase, processing, manufacturing, or packaging of goods before shipment. This can be disbursed in INR or foreign currency depending on the requirement of the borrower. Why it matters is it enables exporter to manage working capital tied up in export goods. Suppose one has got order from foreign country and he do not have fund, he can approach directly to his bank based on the work order and get instant fund from bank. Okay, it is useful for MSMEs engaged in export activities needing finance, especially for export cycle. And the export orders are usually of a large amount, so this comes very hand in hand for the exporters. Now let's move to next. How to choose the right type? How will you know what type of loan suits me? For entrepreneurs, I can say define your core need, capital expenses, working capital, or export finance, or you need credit guarantees. Finance professionals should assess their clients' cash flow, credit worthiness, and business cycles to match appropriate products. Bankers should align loan products with client profiles, risk, compliance for better outcomes. Now, a quick guide from my side to help you decide. Buying assets, go for term loan. Daily operations, you can go for working capital. Startup loan, if it is small, you can go for Mudra loan. Now Mudra loan is extended up to 20 lakhs. And this is a very good scheme, collateral free. And not much paper requirements are there for Mudra loan. If you are planning to start small, you can start with Mudra loan, a very good initiative of government. If you are planning for a big loan, for big and you need require money, you can take from bank, you can borrow up to 10 crore without any collateral requirement, but by paying a nominal CGTMSE fee that is debited yearly from your account, and up to 10 crore fund is guaranteed by government. Okay. Now next is export finance. Go for packing credit or LC. For export finance, PC and LC are very much handy. So if you have government tenders, you don't require much money in hand. You can simply government tenders, for those who don't know, government tenders also take FDs. If you don't have FD, that is fixed deposit, you can simply go for bank guarantees. You can this is also like a facility. Bank gives you a certain limit, and by providing the government orders, you can avail this bank guarantee facility by paying a nominal commission. This is very less. Now the tips for first time borrowers and advisors: keep all loan documents ready, your KYC, financials, tax returns, and export orders if applicable. This is very much required, and in my previous video also I have told you that every 3 months review your documents. Okay, now compare before proceeding for loan. This is very important. Compare interest rates, fees, and loan flexibility among lenders. In today's world it is very easy. Just there are many sites that provide this comparison. You don't need to go on particular bank portal to compare interest rate, fees, and loan flexibility. If you compare and choose the less one, this will save a lot of your money. But I prefer, if you are banking from a certain bank, that you can directly approach them, because they if you are their existing customer. They offer you many facilities like lower interest rate, lower collateral requirement, and customer service is also good. Right, ensure clarity on terms to avoid surprises. This is very very much important. Before uh, sanction of loan, discuss all the requirements, and before signing your loan document, just thoroughly read again and again your sanction letter and understand each word from that. I'll make a video on this of reading of your sanction letter in a separate. Okay, advisors should guide clients on responsible borrowing, product suitability, and documentations. Advisor come here and play a very important role. Okay, now if this video has helped you understand MSME loans better, give it thumbs up, subscribe for more simple finance content, and don't forget to comment below with your questions. I would love to help. Loans are not just about money, they are about dreams. So choose wisely, build boldly, and let your business shine. This is Sangeeta from Smart Credit, your MSME partner in products. Thank you. Thanks for watching.